Ladies and gentlemen, good day and welcome to HG Infra Engineering Limited Q4 and FY22 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rishabh Das from Pareto Capital. Thank you, and over to you, sir.
Good morning, everyone. This is Rishabh Das from Pareto Capital. We represent investor relations for HG Infra Engineering Limited. On behalf of HG Infra, I welcome you all to our Q4 and FY22 earnings conference call. I have with me from the management Mr. Harinder Singh, Chairman and Managing Director, Mr. Rajiv Mishra, CFO, Mr. Vinod Giri, Operations Head, and Mr. Sanjay Bafna, Group Finance and Accounts Head. We will have brief opening remarks from the management followed by the Q&A session. Please note that certain statements made during this call may be forward-looking in nature. Such forward-looking statements are subject to certain risks and uncertainties that could cause our actual results or projections to differ materially from these statements. HG Infra will not be in any way responsible for any action taken based on such statements and undertakes no obligation to publicly update these forward-looking statements to reflect subsequent events or circumstances. I will now hand over the call to Harinder Ji for his opening remarks. Over to you, sir.
Thank you, Rishabh. Good morning, everyone. Thank you for joining us on this call and hope all of you and your families are keeping healthy. I am immensely proud of the performance of our company delivered for the year gone by. In FY22, we reported standalone revenue growth of 43% to reach 3,615 crores, surpassing our target of 3,400 crores, as it was guided during the year. This reinforces our belief in continuously delivering sustainable growth. We surpassed our EBITDA target as well, reporting rupees 585 crores with 16.2% margins, which remained as guided despite inflationary pressures during the year. We faced several headwinds during the year, especially in the last quarter, with rising price of key raw materials and various input costs, which creates pressure on account of disruptions during cold season. Higher fuel prices and geopolitical tensions, etc., have also played impact. However, our strategy on selective bidding and constant efforts on operational efficiencies, coupled with multiple digital initiatives, helped us mitigate this pressure and continue maintaining our profit margins. Our total order inflow in the terms of EPC value stood at 4,328 crores for the last financial year. The total order intake for the year is slightly lower given the intense bidding competition, as we saw major bidding coming in from private players during the year. However, we continue to remain confident for the future inflow given the robust bid pipeline and off the back of the strong tailwinds of the government's focus on infrastructure spending.
So sorry to interrupt you, sir. This is the operator. We don't seem to hear your audio very clearly. I will just check your line. I would request participants to please continue to hold. Ladies and gentlemen, thank you for patiently waiting. We have the management on the call now. Over to you, sir.
Yeah, thank you. So good morning, everyone. Thank you for joining us on this call and hope all of you and your families are keeping healthy. I'm immensely proud of the performance of our company that delivered for the year gone by. In FY22, we reported standalone revenue growth of 43% to reach 3,615 crores, surpassing our target of rupees 3,400 crores as guided during the year. This reinforces our belief in continuously delivering sustainable growth. We surpassed our EBITDA target as well, reporting rupees 585 crores with 16.2% margins, which remained as guided despite inflationary pressures during the year. We faced several headwinds during the year, especially in the last quarter, with rising price of key raw materials and various input costs, pressures on account of disruption due to COVID, higher crude prices, and geopolitical tensions, etc. However, our strategy on selective bidding and constant efforts on operational efficiencies, coupled with multiple digital initiatives, help us mitigate this pressure and continue maintaining our margin profile. Our total order inflow in terms of EPC value stood at rupees 4,328 crores for the last financial year. The total order intake for the year is slightly lower given the intense bidding competition. We saw major bidding coming in from private players during the year. However, we continue to remain confident of the future inflow given the robust bid pipeline and on the back of the strong tailwinds with the government's focus on infrastructure spending. Let me now give you some color on the sector. The second wave of COVID-19 and prolonged monsoon in the country had impacted on the execution of certain projects. The execution was lower across industry due to the unseasonal rains and cyclones, combined with a steep rise in the input prices, limiting the ability to ramp up it significantly. The total construction of national highways was 10,400 kilometers, a decline of nearly 24% as compared to the previous year. However, NHAI and different agencies outbid last year's performance. The government's initiative to construct 25,000 kilometers of national highway in FY23 gave us a lot of visibility on tendering activity going ahead. Further, the government's overall plan to develop 2 lakh kilometers of national highway network by 2025 helps us remain confident in the opportunities the sector has to offer. Moving to the operational performance of the company, we have achieved major milestones in several of our projects which have driven growth in this financial year. We were pleased to receive the PCOD of 3 of our HAM projects, Gurgaon Sona, Rewari Ateli Mandi, and Narnaul Bypass. We also received PCOD for our EPC projects, including Banar Bhopargarh and Jodhpur Marwad of the state of Rajasthan, and Morshi Chandra Bazaar of Morse, Maharashtra. I am pleased to announce that we are eligible to bonus in Rewari Ateli Mandi and Narnaul Bypass project for 170 and 255 days respectively. I would like to give a small brief to the forum on the progress we have made in our major EPC projects. We have made significant progress on Delhi-Vadodara Package 4 project, which has almost completed now, and further we have applied for COD of the same. In DV Package 8, we have made good progress and have completed around 75% till date. In Delhi-Vadodara Package 9, we have completed around 59% till 31st of March. In Hapur-Moradabad EPC project, we have completed close to 78% of the project, and we expect to complete the project in first half of FY23. However, we have applied for the PCOD of this particular project, likely to be achieved in June 22. In the Mancherial project of Adani, we have completed around 56%. There has been some land dispersion into that, but however, we are applying for the PCOD of this particular project in June 22. They're likely to get by July. In the EPC project, which we received on 28th of October of Kerala Khanjawala in Delhi, that is a UER2, we have completed 4% of the work. The progress of this work has been very much disrupted because of the initial construction ban for the NGT reasons, and later on in the month of January, the reason behind has been the adverse weather of rains and fog and winter. However, now this project is going on well on track. In our latest EPC edition, Neelmangala Tumkur, we have received letter of acceptance in January 22 and are yet to sign the concession agreement, which is likely to be signed in June. Coming to our HAM projects under execution and newly added HAM projects during the year, which are also progressing well as per the scheduled timelines. In Rewari Bypass HAM project, we have completed around 60%. In Raipur-Visakhapatnam AP1 HAM, we have recently achieved the financial clearance and received the appointed date as 31st March 2022. In Khammam-Devarapalle Package 1 and 2, we received letter of acceptance in the month of September, for which we have signed the agreement for Package 2 on February 25th of February 2022 and expect to sign the agreement for Package 1 in month of June. Lastly, in two of the HAM projects of Raipur-Visakhapatnam corridor, that is Odisha Package 5 and 6, we have received the letter of acceptance in the month of October and signed concession agreement on December 14, 2021. Further, we have received the financial clearance from the banks on March 25, 2022 and May 6, 2022. And we are likely to get the appointed date of these projects within a week, 10 days time. For all the 9 HAM projects, we have a total equity requirement of rupees 1,137 crores that is projected till FY25. Of this total amount which we have already invested is 354 crores as of March 2022, and we project to invest some 459 crores during this financial year, that is FY23. Before I share the outcome guidance with you, I would like to hand over the call to our CFO Rajiv Mishra to touch upon the financial highlights of the company. Over to you, Rajiv.
Thank you, sir. Good morning to all of you. Let me brief you on the financial performance for the quarter and full year.
Members of the management, we cannot hear you at the moment. I think your line was muted.
Yeah. Sorry. Thank you, sir. Good morning to everybody. Let me brief you on the financial performance for the quarter and full year ended March 22. For the quarter, standalone revenue stood at rupees 1,026 crore. We reported an EBITDA of rupees 157 crores and PAT stood at rupees 91 crores with a margin of 8.9%. For the full year performance, revenue stood at rupees 3,615 crores, a growth of 43% as compared to last year. EBITDA stood at rupees 585 crores with a margin of 16.2% and PAT stood at rupees 338 crores with a margin of 9.3%. Our endeavors to strengthen our balance sheet continue to remain our focus. Total standalone gross debt as on 31st March 22 stood at rupees 315 crore. This includes working capital debt of rupees 44 crore, term loans plus current maturities of rupees 271 crore and NCD of rupees 97 crore. Cash and bank balance on standalone level stood at rupees 159 crores. Our consolidated debt stood at rupees 1,183 crores, which includes project loans of 869 crores. Cash and bank balance on the console level stood at rupees 165 crores. We have seen further improvement in our working capital also. As on March 22, we had debtors of 49 days, inventory days were 36, and creditors days were 54. Overall, net working capital of 31 days compared to 33 days at the start of the year. Our debt to equity position has also improved during the year with a further reduction to 0.23 times as of March 22 in comparison to 0.28 times at the end March 21. We are also proud to announce and share with all of you that we have been awarded a rating upgrade by ICRA from A+ to AA- on long-term facilities and from A1 to A1+ on the short-term facilities. With this, I will now request Harendra sir to take the things ahead for the further remarks.
Thank you, Rajiv. Let me shortly touch upon the digital initiative.
So we lost your audio.
Now it's okay, I think.
Yes.
So thank you, Rajiv. Let me just shortly touch upon the digital initiatives we have undertaken during the year. We rely strongly on having accurate and timely information, which helps us in executing and achieving operational excellence. On this front, digital transformation continues to be a key focus area for us. We have undertaken several new technology initiatives in the company during the year and implemented various solutions to enhance our operational efficiency and cost reduction measures. Some of the initiatives we have taken are sensor-based technology for fuel dispensing and fuel level management system, and that gives us the real-time information on consumption and put an effective control on fuel cost, which is a major constitute in our material. We have already enabled this technology on 40% of our moving machines. There are also other active initiatives that improve equipment control, vehicle management, and inspection, and offer multifunctional applications to automate our manual process and more. Finally, let me brief you on our guidance and outlook for this financial year. We have time and again demonstrated our strong execution capabilities. Our experience and demonstration on the execution front, combined with the ability to operate and complete projects in a timely manner, gives us the confidence of maintaining growth going ahead. We aim to achieve revenue of rupees 5,000 crores while maintaining a 15.5 to 16% EBITDA margin range for the financial year FY23. The key focus ahead will be on winning selective projects that complement our order book and ensure efficiencies. Our goal is to achieve 9,000 to 10,000 crores of order inflow in FY23. We already have numerous bids underway yet to open for a total of rupees 14,000 crores in road projects, which are under both EPC and HAM. We are very confident of receiving good order inflow in FY23. We are optimistic and believe that the infrastructure sector has a lot of runway yet to cover. The long-term visibility of awarding activity and government spending rightly positions us to tap into various opportunities coming in our way. Given our comfortable order book position, strong revenue visibility, and healthy financial position, we strive to keep improving efficiencies and further enhance our position as a leading infrastructure developer going ahead. Now I would like the moderator to open the floor for question and answer. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohit Kumar from DAM Capital. Please go ahead.
Good afternoon, sir, and congratulations on a good set of numbers, especially for the fiscal year. So my first question is on the guidance. What kind of guidance you are for revenue and EBITDA margin you expect in FY23? And given that there is a muted order inflow, how do you see FY24?
Members of the management, we cannot hear you.
So I'm audible?
Yes, now you are, sir.
So I already guided during my speech that we would be maintaining a EBITDA margin of about 15.5 to 16% during FY23, and our order inflow of about 9,000 to 10,000 crores during the year. And if whatever you are saying for FY24, I think with likely order addition of 9,000 to 10,000 during a year, and with a stable commodity price hit, we can just imagine that we would be again maintaining that 16 to 16.5% EBITDA during FY24.
Can you just repeat this, revenue guidance? I didn't get it.
It's a 9,000 to 10,000 crores during the year, this FY23.
Revenue. That's order inflow, correct, sir?
Order inflow, yes. The revenue is already given, that 5,000 crores of revenue to be done during this year of FY23.
Okay, understood, sir. Secondly, sir, where are we in terms of monetizing our portfolio? Given that we roughly around 3 to 4 projects have commissioned, and the related question is that I understand that you are eligible for bonus for all these 3 HAM projects. Can you just let us know how much bonus we can expect in FY23?
See, the bonus which you are saying, it's not for all 3 projects, for 2 projects only, and that is almost equivalent to about 24 crore rupees, which is we are likely to get within this first half of this financial year. And as far as monetization of these assets is concerned, so we initially had a discussion last year, but later on we decided just to hold for this for at least for a 6 months or 9 months gap. Once started getting the NVT and say having the experience of O&M of these particular project or say annual O&M maintenance. So this is where we were again reinitiating our talks with the say potential investors. So most likely by this year end we would be in a position to get the transaction done.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Shravan Shah from Dolat Capital Markets. Please go ahead.
Hi, sir. Congrats on a full year, very good set of performance, and also good to hear that 5,000 crore revenue guidance, that is a 38-39% growth. So that boosts the confidence. Sir, just to touch base on the 9 to 10,000 crore order inflow that we are looking at. So can you split in terms of the EPC HAM how much we are looking at? So previously we were saying that 6,000 crore order in HAM we can take without going for a monetization. So is that stand remains the same?
Yeah, of course. I think for HAM we are keeping a guidance of about 3,500 crores of addition during this FY23, so that we would be getting at least EPC value of 3,000 crores into that. So out of this 9,000, 10,000, this is the one, and where we are looking for a certain project of say in Ganga Expressway, as we have already discussed, that is a EPC project. And apart from that, we are looking into 1,000 odd crores of addition into other sectors, which we tried for this in FY22 even, but we could not succeed. But this year we are very much hopeful with our team will already equipped that water sector or railway. We are looking at about at least 10% of addition on this sector, and remaining are the EPC of NHAI.
Okay, good. And roughly in terms of the Ganga Expressway, it would be the 3,000 to 4,000 crore kind of a EPC value. So it would be a one package or more than one package?
No, it is a single package which we would be getting as a group. That is not less than 4,000 crore, which letter of acceptance we are expecting very soon because the notice to proceed has been issued to us.
Okay, got it. Second is in terms of the appointed date. So previously we were expecting the, as you mentioned, that in weeks or 10 days we will be getting the appointed date for the 2 packages of Raipur Visakhapatnam. What about the Khammam, when we will be getting the appointed date, and the recent Karnataka EPC projects, so when the appointed date is expected?
See, with OD packages 5 and 6, which is likely to get within this month only, with only 3 packages would be left out where the appointed date is yet awaited. That is Khamram Devrapalli, which in any case we will be taking the appointed date in September and October. So of those packages, there is a significant improvement in the land availability is now visible. And then again, Neel Bangla Tumkur, which is the EPC project of NHAI. So August or September, that is again those in quarter 3 we would be getting the appointed date for all, quarter 2. By end we would be getting the appointed date all these 3 projects.
Okay. Sir, the other question is in terms of the working capital. I understand in terms of the days it has improved, but if we look at in terms of the operating cash flows. So 363 crore odd kind of a cash flow has gone into the working capital, particularly contract assets and contract liabilities. So can you explain a little bit more so why it has happened, and can we see that trend should be changing, because that would be putting a pressure on the CFO, because overall CFO for this year has significantly reduced versus last year, 527 now 114 crore.
See the total, if you are looking to the March numbers, you can see that the total debtor, which has been significantly gone up. So the reason behind is last year there was a unique circular issued by NHAI by 22nd of March. In March 22nd date of March, they have insisted that the bill should be passed and paid during that year. So for that reason, we got most of the receivables of NHAI EPC in those years in a timely way, means in the March itself. So that gave there is a substantial reduction in that, and resulting in the cash available at the company. But then again, this year, if you can see, out of the total debtors of over 277 crores in these projects of government, NHAI and Ministry and NTPC, we received 194 crores during in the month of April only. So it's not a long term receivables or a stressed receivables, they are all in track. So that is a significant number which you can see at the year end of FY21 and this year. But most likely, as we already has guided in the Q3 Concall, that this debtor is likely to reduce, because the SPV debtor, which has not gone very high, it is all in control. There has been some inbuilt revenue in SPVs, because we have recently completed all three, and certain COS are likely to be received. So there it is there. But otherwise, we have seen that there is not much of an increase in the debtor, even if we have increased 43% of our revenue. So the debtors are not increased, and we would be in a range of about 450 odd crore rupees of receivables, the debtor receivables on a yearly manner or quarterly basis.
Okay, got it. And lastly, on the data points, sir. So equity requirement, you said 459 crore to be invested in FY23. So what about the balance out of to be invested in 24-25? What will be the capex? Because last time we guided 75 crore in every year, and retention money, mobilization advance, and unbilled revenue number as on March.
So if you first has
equity.
Balance equity requirement. The balance equity requirement for FY24 is coming about 208 crore rupees, and followed by FY25 it is 113 crore rupees. And the second question has been
capex. So last time we said 75 crore kind of a capex. So the number remains the same.
Last year it has been the same, but this year we expect that there will be a likely increase. That capex would be not in the 175 bracket, because with the orders which we are expecting, and these are the substantially significantly good magnitude orders. So we expect that the orders, the capex addition would be in the range of 110 to 120 crore rupees. That is the net capex addition, because we are in that range where with about in 2016-17 we started our major capex addition, and within that 5 to 7 years our fleet need to be young, as we always believe, for our better operational efficiency. So we would be just phasing out those capex to sell out those capex. So net capex requirement is coming at about 110 to 20 crore rupees.
Okay. Lastly, the data point on retention money, mobilization advance, and unbilled revenue as on March.
So mobilization advance has been decreased by almost 65 crore rupees if you compare with March 21 numbers. Unbilled revenue, that has been given that reason for it. In SPVs, we are most of the contract assets are there, where all final bills and the COS and everything is now on card. But again, we have decreased the unbilled portions. But there in NTPC, that we are doing some potash transportation works merged with the Adani project of Mancherial. There is a slight 61 crore rupees is there. But altogether, this unbilled is in Delhi Vadodara packages or UER, that has been in the range of about 77 odd crore rupees into those projects. So not stressed unbilled, it is all we are getting on a quarterly manner.
Sir, is it possible to summarize everything in terms of the absolute number? So last time we said retention money was 182 odd crore as on December, mobilization was 271 crore, and unbilled was 340 crore. So what would be the corresponding number for as on March?
No. If what you are looking at, say 520 crore is a debtor.
Sir, I'm asking the retention money as on March, mobilization advance as on March, and unbilled revenue as on March.
Retention money is about 180 crore rupees. Retention money is at 180 crore rupees. 361 crore rupees is the unbilled revenue.
Okay.
And what else?
Mobilization advance.
Mobilization advance is 195 crore rupees.
Okay. Got it. All the best, sir. Thank you.
Thank you. The next question is from the line of Ashish Shah from Centrum Broking. Please go ahead.
Yeah. Good morning, sir. Sir, the first question.
I'm sorry to interrupt you, Ashish. Your audio is quite low. I would request you to speak louder or increase the volume on the phone, please.
Okay. Is it better?
Slightly better. If you can speak a bit louder, I think it should help.
Sure. So the first question is that there seems to be a little bit change in the accounting, where a part of the other income has gone and been reported in revenue. So if you can just explain the change which has happened in terms of accounting.
So there is the other income which was coming from other part like rental revenue, and so those has been now taken into main revenue. So it's not a big number. It's almost 6-7 crore rupees which is there.
Right. Sure. So it's a rental income which we have taken as a part of the reported revenue.
Earlier it was so you can see the number change from 21 to 22. So this is the only number which has changed.
Right. Sure, sir. Secondly, in terms of the revenue, if you try to reconcile it from the individual orders, it seems there is some change of scope, etc. Because the difference of the order backlogs is not really adding up to the total revenue that we have reported. So if you can just highlight if there has been any significant change of scope or order addition in any of the projects.
No, change of scope in the tune of over 95 crore which has been recognized during this quarter 4. But otherwise, if you can see, this total of 7,972 crores of order balance is there.
Okay. So was there any utility shifting revenue which was sizable for the quarter?
Yeah, of course. I think it is an ongoing process in any of the COS or utility shifting. So the significant revenue, if you can just, it's not that a big number, but definitely if you see to the order balance, it is about, say, 120 crore rupees are from utility, and recently, say, almost it's 95 crore from the COS, which is recently being recognized.
Okay. For the quarter, it would have been how much, sir, for the fourth quarter?
Sorry, for the fourth quarter, what is the revenue portion?
Revenue on the utility shifting part?
It's not that big number. It is only 14 odd crore rupees within the utility. It is the order balance which we are talking for.
Right. No, that I got, sir. That part is okay. Fine, sir. Lastly, on the financial closure side, are we seeing any tightening in the market in terms of some of the smaller players or some of the unlisted players who had got big amount of projects last year? Are we seeing any difficulties in financial closure for those projects? And as a result of that, is it possible that we could see a significant amount of slowdown in bidding from such players in this financial year?
No, you cannot rule it out. Say it's not a significant trend is visible as far as financial closure, but definitely banks have taken a caution to fund those companies where they have taken significant portion of where the equity is not enough. But you cannot just say as a trend which we would be expecting within a 6 months or say quarter 2 to 3, we would be in a position to just witness those improvements as a competitive intensity is concerned.
Right. And so just last one, if I may, the 5,000 crore guidance that we have given for 23, that seems to be a little steep. If you can just probably break it up into how much of this 5,000 crore you expect will come from the projects where you are still expecting the appointed dates, because Just intuitively, sir, this 5,000 crore number seems to be a bit too steep given the order backlog position. So if you can just break it up, it will be helpful.
Yeah. For what we have considered out of 7,900, which is the order balance, so out of this, the projects which are under execution where the appointed date has already been declared. So those execution from those projects would be in the tune of 3,200 crore rupees. So that gives the visibility that for balance 1,800, we are expecting some 800 odd crore rupees to be executed in Ganga Expressway, and 1,000 crores would be executed in these appointed date, which in Q2 we are expecting. Because significantly mobilization has already been done into these projects. So these are almost about say 2,200 crores projects where the appointed date is we are expecting in Q2. And then this Raipur Visakhapatnam I have already considered in 3,200 crores.
Got it, sir. Thank you. That's all. Thank you.
Thank you.
Thank you. The next question is from the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Yeah, hi. Good afternoon, sir. Thanks for taking my question and congrats on great execution once again. So just to harp a bit more on Ashish's last question of 5,000 crore guidance. So you mentioned 3,200 crores is what you are expecting from the under execution projects. This includes the two Vizag HAM projects?
Yes, this is all inclusive, which I am talking of a Raipur Visakhapatnam corridor, all three projects. Where appointed date on 31st March they received for AP1 and OD56 inclusive of that.
Got it, sir. So if I look at our order book, let's say total order book of around 8,000 crores, and out of that almost 4,000 crores is already under execution, and around 2,000 crores is the Raipur with Vizag 2 packages. So almost 6,000 crores of order book is, so you are expecting 3,200 crores of execution from almost 6,000 crores of orders. So almost 50% of the projects of this entire under execution order book will be completed next year.
So let me correct. You cannot just compare based upon that 50% of the total execution is going to be done within the year. So this is, you can say that Delhi Vadodara package 8 and 9 where say about 600 something crore rupees balance, which we expect that 100% by October we are completing those projects. So with that, I think it's those are those projects like Hapur Muradabad of IRB. Already I indicated that in June we are likely to get the COD. So not much of a balance is there. If you are talking about Adani projects from Mancherial, that we are likely to get say PCOD in July or August, and the balance for execution of about say there is a significant portion where the land portion was hindered. So by December 22 we are likely to complete. So those are all the projects where we would be completing these projects where the balance is say only the project which could be say spilled over in the next year FY23-24. So that is I am talking of say UER, there is a Delhi project, and if you talk of Odisha package 1 and 5 and 6 and the AP1. So those are the projects which could be spilled over. The balance all would be completed during the financial year.
Got it, sir. Got it. And in terms of the Ganga Expressway, sir, as you mentioned that we have already received the notice to proceed. So basically, so I think when do you think we would be able to start execution on this? Because I think we are already at the end of Q1. Q2 will probably be impacted by monsoon. So do we expect that to start somewhere in Q3 or maybe before that as well?
No, in Q2 we can see not much, but at least 50 to 100 crores of execution, because the appointed date is likely to be received once this, because in north the monsoon is not that prolonged. So by August time we would be in a range, we would be likely to get the appointed date.
Right, and so we would be able to start work only once the Adani group gets the financial closure, right? And they get the financial closure approval from the PIDA.
No, there are two ways. One is the client aspect of the say condition precedence is the EC and all, and their financial closure. I think this 3 months time is a reasonably good time for them to complete each and every say condition required.
Got it, sir. And just last question from my side on the margins front. I know in this quarter also we reported very strong margins despite inflationary pressures on the commodity prices. How do you see it playing out over the next year? I know you've given a guidance of 15.5% to 16%, but do you think that in the Q1 and Q2 the cost pressure could actually be much higher, and we could probably see some more correction in the margins and then probably recover in the second half? Or do you think we have enough buffer and enough let's say provisions in the system to be able to maintain a steady kind of a margin through the year?
We have seen the margin pressure in Q4, that is all visible. But in Q1, again, we cannot rule it out because the project which we are now, the mainstream of execution, those are all projects that are being awarded to us in 2.5 years earlier. So there, I think you can just see to the commodity hit where this margin pressure is there. But later on, I think significant execution would be coming from those projects which we got during March 21 or so. Those are the projects where the almost the prices which we have considered in our rate. They are not that there is a not big gap into a recent price of commodity to that. So we will not see much of a hit in quarter 2 and onwards quarter 3 and quarter 4. So quarter 3 and 4, again we will be in a range of about 16 to 16.5. So that is I'm giving an average out of about say 15.5 to 16. Sorry.
Got it. So just one last question, if I may. Any non-road orders that you are looking for this in this year in terms of either water or irrigation or Jal Jeevan Mission, any of those orders that we are planning to bid for and probably included in our 9 to 10,000 crores of order inflow guidance?
Yeah, sure. We are looking at about say almost 10% or say 1,000 to 1,500 crores of order to be added from especially from water sector like JJM, say where we already had prepared, but because of UP elections we could not bid that charge data and all. But now we are targeting the 3 states are there with JJM projects which we would be looking for. And other than that, railways always has been we are continuing for bids of those projects. We believe that 1,000 to 1,500 is expected during the year, and that is our gut feeling if we would be getting it.
Got it, sir. Great, sir. Thank you so much for answering my questions and wish you all the best.
Thank you.
Thank you, ladies and gentlemen. In order to ensure that the management will be able to address questions from all participants, we would request you to please limit your question to 2 at a time. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Jiten Rushi from Axis Capital. Please go ahead.
Yeah, good morning, sir. Thank you for taking my question. So my first question is on the Adani UP project. Sir, can you just highlight in details about the project, like what would be your mobilization advances, early completion bonus execution timeline, and sourcing of aggregates for the project, whether it will be provided by Adani or we should be doing through mining of our own. So a bit broader view on the project that would help us to understand.
See, this project is almost a group of about 151 kilometers, and for that, the one is the lump sum turnkey EPC project to us. It has similar terms and conditions with NHAI, except for the price variation condition, say where we have also experienced a big hit in our EPC projects rather than the HAM projects in our last few quarters. So we have just gone into arrangement where the price variation clause is having the star rate price variation rather than any of that where the moving average or any of the WPI or CPI has been referred to. So there has been a significant change in the condition as far as the PV is concerned. And other than all conditions are the same, we are need to design, construct each and everything. 27 months is the duration. So if we complete in 24 months, we would be getting some 50 crores of bonus into that. That is a maximum limit of 3 months and 50 crores. And the aggregate which we are looking at, we are deploying few of our crushers to source the aggregate. It's for catering about say 30-35% of the total aggregate requirement. Balance we are going to outsource because it is in UP. We are going to get aggregate from about say 200 to 250 odd kilometers lead.
You said that on the price variation, it is based on the actual billing. You will get repaid. What I understand, right?
Star rate. Basically, it is a star rate price variation.
And this aggregate, you said 30-35% you will source from your own mines, and balance you will purchase from outside, which is 200-250 kilometers away from the site, right, sir?
Right.
So this the margin from this project could be in the range of what, 15-16% or even higher?
Yeah, even we expect that 15% is not ruled out because the PV is not going to impact in any case there.
So, sir, we are targeting to complete this project well before time because, as you said, if you are targeting around 800 crore from this project, so what would be your target for FY24 from this project in terms of revenue?
With the tentative appointed date likely to receive in August, with that 27 months comes in 24 December, tentatively. So we are looking at about 24 months completion timeline for this.
basically in December you can see in the FY24 we can see 2,000 crore plus of revenue almost.
Yeah,
2,500 crore.
For sure.
So sir, coming to this only, so what could be our revenue guidance for FY24 then?
See, with the likely order inflow during the year about 9,000 to 10,000, and with the current order in hand, we believe that we would be executing some 5,000 crores during the year. And with that, we are looking at about 6,000, that is about 20% year on year for the next year, so 24.
Sir, with this mammoth growth which you are guiding, any impact you will see on the working capital, because now your share from subcontracting will go up significantly in revenue, and the payment terms, obviously I understand it should be good only, but we have seen in the past where private players have a payment issue, there is a delay, we have seen in IRB or Tata projects or even in Adani. So how are you going to manage your working capital in such case?
So the conditions with the Adani is very specific that they are going to give us a mobilization advance as well as each and every terms which NHA usually is having their EPC. And it's a monthly payment. It's a DBUPT project for them. So in any case, for any reason, if prolonging the execution for payment is not likely to happen for any of concessionaire or a developer. So it is like this, once they have declared that 50 crore bonus is there for 3 months. So they are going to reduce the interest during construction and just to start the toll even. So we do expect that, I think, whatever stress we have experienced in, but for Adani Mancherial project, we have never experienced it. Today even we have, say, a monthly payment cycle in which we are getting every month payment is received.
Okay, so you will get the 10% mobilization advance here also, so there should not be any issue in terms of execution.
And then again, you can see that we are balancing out our total orders into the HAM as well as our EPC and EPC private even. So there the balancing is visible that the payments, those bit of a stress in IRB and then the Rajasthan project. But then again, we are able to manage and having a decent working capital cycle.
So any more subcontracting projects are we looking for now, or we are okay with the Adani project?
By this June, we would be completing this IRB project, and it was significantly about 22% or 23% of the total orders last year, which were from the private players. So with that, it would definitely for a shorter period of time of about 6 to 8 months, it would be visible that the private players' contribution into the total orders is at 40%. But later on it would be even 35%, but later on it would be all decreased. We are not looking ahead for any further addition of this Concall scope.
And so this NCD which we have raised, so what is the rate at which we have raised and what is the payment terms?
It's a monthly payment.
Monthly. And so what is
being broken to monthly payment, but it's a breakup of it. Within 10 days of our submission of bill, we would be getting 60% of the payment and balance within a month.
I'm asking about the NCD of 97 crores which we have raised. What is the interest rate and door-to-door payment terms?
It is 8% flat, and the payment term is 18 months of the moratorium, which the repayment would be started in the June 23 and to be paid in 18 months, subsequent 18 months in a quarterly manner.
Sorry, sir, to be paid in what? Can you repeat, sir, please?
Six installments every quarter that would be repaid.
Okay, starting from June 23. So basically Q1 24 and then 6 installments quarterly.
Yes.
Okay, sir. That's it from my side, sir. If I have any further question, I will come back in the queue. Thank you and all the best.
Thank you. Request participants to limit your question to 2 at a time. The next question is from the line of Prem Khurana from Anand Rathi. Please go ahead.
Yeah, thank you for taking my question, sir, and congratulations on a pretty decent set of numbers during the quarter. Most of my questions are already answered, so just 2, more on sector. So one, essentially, Ministry of Road Transportation and Highways recently came out with a notification wherein they seem to have changed the bidding criteria for hybrid annuities. They're moving from bid price to bid project cost, and O&M would be fixed as a percentage of the bid project cost that you give. So how do you see this to kind of come to impact the competitive intensity that you see for hybrid annuities? I mean, do you get to have this feeling that because of this now, because there's limited scope for you to be able to kind of upfront O&M, you would see bids to turn saner and therefore competition would go down and we would stand to benefit?
I think what you're saying, this is they are almost streamlining this disparity into O&M, where I think front loading or forward loading was there. So we cannot, we don't see any big challenge as far as there is an increase in the competitive intensity or the people would be taking, because it's a very nominal number. If you see any of the projects which we have bidded and we are doing, there are a reasonable O&M has been there. So we are doing those O&M and with the same cost. So it doesn't make sense that they have indicated that 0.6% say year on year, initial year of 0.4%. That's coming for 1,000 crore of TPC, tentative project cost. It is coming at 4 to 5 crore rupees in the initial year, later on increased to 6 crore rupees. Then I think first overlay being done, with that overlay I think again being reduced to 4 crore rupees. So it is almost the same, but they are now regularizing or standardization that one cannot interpret and just indicate that front loading is possible.
No, so I was asking him whether you see any change in competitive intensity because of this, because some of these small contractors were kind of quoting a little low in terms of O&M and were able to kind of make it a success now, essentially, because I think even the NHA was kind of hesitant to give these orders because they felt, I mean, there could be a situation wherein if you're not to quote the right number in terms of O&M, you could have a situation wherein the contractor doesn't kind of honor the O&M commitment and leave the asset in between. So do you see any change in competition or no?
No, nothing would be changed. It is basically standardizing the O&M. One cannot just bid 1 crore rupees if it is required for say 5 or 7 crore rupees a year.
Sure. And sir, I think the excise cut, which is where, I mean, there's this fear in the market that because it is coming from road and infrastructure cess, which is where, I mean, people are slightly worried whether NHI would get to have money in time from the government to kind of meet their obligations or the commitments. So, I mean, any conversation that you would have had with either, let's say, NHI or ministry?
I think it's the all industry representation coming to the government, which is not only highway, it is all builders, etc. So this cut or say any of the relief given in the prices of diesel even. So this is all because they are seeing that the commodity price going very high, inflation is at an all-time high. So it's not that result that we would be getting that the budget would be impacted for that reason and the infrastructure further say for 23 or 25 range in that few subsequent years it would be reflected. We do not see that is some indicated in that.
Sure. And just one last, if I may, please. So for the orders wherein we're still waiting for appointed, it's possible to share how much is the mobilization advances that you would be able to kind of draw? How much more is possible from these orders that you already have available with you?
You can see that the order in the mobilization advance, which was at about 323 crores at the year end of March 21, now it's reduced to 210 crore rupees. So with that, I think the appoint date of Raipur, Visakhapatnam, all corridors, and say in quarter 2, we would be again coming back to about say 350 to 400 crores of mob advance being received from SPVs or from these clients.
Sure. And just one last, given the fact that we've attained PCOD for 3 of our assets now, any efforts on refinancing, anything that you could share with us, please?
We have already done our agreement and whatever the interest rate which we are getting from NHA on the annuity payments, the cost incurred by us is much less than what exactly we are getting right now.
Sure. Possible to share the number, sir? I mean the revised number in terms of finance cost now?
It's almost is about 7.1 to 7.3%.
Oh, okay. Sure. Thank you. That's it, my end. Thank you. Thanks a lot.
Thank you. We would request participants to please limit your question to 2 at a time. There are several others waiting for their turn as well. Thank you. The next question is from the line of Dhruv Bhimrajka from Monarch AIF. Please go ahead.
Good morning, sir, and congratulations on a good set of numbers. So for the equity requirement of rupees 459 crores as it's stated for FY23, so are we confident of doing it all for internal approvals, or how are we planning the sources of funding for this amount?
No, it has to be done within internal approvals only. We don't require any of the debt or any equity to be raised for that reason.
Okay. And sir, one thing which I noticed in the presentation versus the 3Q22 PPT is that for OD5 and OD6, the land acquisition numbers in the previous presentation were approximately 90%, and in this PPT it is 80 and 81%. So is there a mistake or has something changed on?
I think there has been some mistake into that. Earlier we have considered the forest where I think some notification was yet to be issued. So stage 1 clearance was done, but stage 2 was not concluded that time. So it is because of that. Now it is the right number is 88%, where joint memorandum has already been signed with NHA. That's why we are getting the appointed date within a week's time.
Okay. And so just one last small question is that for the Rewari bypass phase 4, in the previous PPT we had mentioned 37% physical progress completion, and it is the same number in 4Q22. So any reason for not much execution on this one quarter on quarter?
No, I think I've already told that you have the 60% of the execution that has been done in March 2022.
Okay, fine, sir. Thank you so much. Thank you.
Thank you. The next question is from the line of Vishal Periwal from IDBI Capital. Please go ahead.
Yeah, thanks for the opportunity, sir. Sir, from a repetition point of view, you mentioned 5,000 crore breakup revenue. One is like 3,200 crore from the current projects which are under execution. You mentioned something for Ganga Expressway and for AD which are appointed. Can you just repeat that?
Yeah. So what you want me to repeat?
Yes, sir.
So if you consider this Raipur-Visakhapatnam, all 3 packages, which within this month we are going to get appointed date of 1 received and 2 more will be received. There's 3,200 crore will be executed from these. Out of most of the projects are, say, about 6 projects are there, which are nearing completion and would be completed by Q3. So they all would be contributing majorly into those execution. And apart from that, some 800 crore is from Ganga Expressway, which we are going to start, say, by August end. And the remaining Khammam-Devarapalle package 1 and 2 and Tumkur, that's the Karnataka package of EPC NHI. So there we are expecting some 1,000 crore would be executed in those projects.
Okay. No, just to repeat, so you mentioned 3,200 crore from the project which are under execution, where AD and everything is received, and 1,800 crore Ganga Expressway. So
it's not 1,800, it's 800.
800. Okay, my mistake. Right. And so will that be fair to say, since Ganga Expressway and the project AD which are yet to receive, probably they will happen sometime in September. So second half will see a pretty strong set of growth vis-a-vis the first half on YoY basis?
Yeah, of course. I think we can very well assume that the second half would be really the robust growth would be visible there.
Okay. And then you did mention, for Ganga Expressway, notice to proceed is received. So is it order inflow is just around the corner within this quarter? Can we receive it for Ganga Expressway?
Yeah, we are expecting by this month end.
This month end. Okay, right. And one broad industry question. Between the EPC and HAM, which is a better model from a developer point of view to get a cost inflation on raw material?
Steve, what we have experienced for us, HAM is a decent one where we doesn't felt the big impact was there. But in EPC, we have seen that the impact is because of some formula correction is desired at the contract level. So what we already initiated our request to NHAI and Ministry. They are doing so to get it corrected. Because earlier it was all standard formula for all EPC, having a different complexity of the commodity component. So now they are going to complete it. But in any case, probably later on, I think it would be EPC or HAM irrespective. It's the same. It would be the same.
Okay. So will that be fair to say for HAM projects, whatever the cost inflation that we get, it's maybe some bit of deviation in a monthly, quarterly basis, but it's a complete pass-through?
No, it's not a complete pass-through, but we have experienced that there is not big impact because most of the HAM which we did, it's not in quarter 3 and quarter 4, not a big number executed in these quarters. So we have completed mostly in quarter 2 or say some portion in quarter 3. So with that, I think we couldn't get, we didn't have that big impact into it.
Okay. But I mean, yeah, it's commendable, like, at least on a numbers basis, the number, I mean, like, on a margin basis, the numbers are still being maintained 15 and 16%. Yeah. Yeah, thanks. I think that's it from my side.
Thank you. The next question is from the line of Amber Singhania from Nippon Mutual Fund. Please go ahead.
Hi, sir. Thanks for taking my question.
Sorry to interrupt you, Mrs. Singhania. Your audio is very low. I would request you to increase the volume on your phone or speak louder.
Hello. Am I audible now?
Better.
Yeah.
Go ahead.
So just wanted to understand a bit more on the revenue guidance which you have shared. I know you have explained a lot, but just to clarify, you are saying that 1,800 crore roughly is the order book of the old orders, barring the new ones as such. So entire 1,800 crore will get executed out of Raipur and Kerala, which is 2,000 crore. You are expecting around 1,000 crore. Raipur, Visakhapatnam 1 and Kerala, which is just started. You're expecting 1,000 crore out of 2,000 crore of order book. Balance 4,200 crore where you are expecting AD, you are expecting another 1,000 crore. And the 9,000 crore kind of revenue or order inflow, you are expecting around 1,200 crore. Am I correct, sir, on that line?
No, probably I just corrected that the project which where the appointed date is already received. It's not 1,800. It is coming at about 3,000 crore.
Yeah, that includes Kerala and Raipur, Visakhapatnam 1, right?
Yes. Then if you include that, it is coming at 3,800 crore rather.
Yes.
So what I am saying is that out of those projects, we would be completing almost 3,200 crore, but that includes the packages of OD 5 and 6, where we are going to get the appointed date within a shorter period, even within a maximum week's time.
Okay.
So that gives that indication that about 2,200 crores of orders, these orders, where we are likely to get the appointed date within a week's time, they are all being added into it.
So 6,000 crore of orders will give you 3,800 crore of revenue.
That's 6,000 of the total order balance. We would be doing some 3,200 out of these projects.
Sir, but considering out of this 2,200 crore, you are still awaiting AD, so second half will be under execution. Isn't it a very aggressive estimate to get?
For any of the projects which we have already, say, almost in March 21, they were awarded. And where we have already significant mobilization being done, most of the things are aligned, design, etc. So as soon as we are getting the appointed date and the land is all available, so we would ramp up the execution to that extent. That is quite visible, quite possible even.
Okay. Fine, sir. That's it from my side. Thank you.
Thank you. The next question is from the line of Franklin Moraes from Equentis Wealth Advisory. Please go ahead.
Yeah, sir. Thanks for taking my question. So I wanted to just understand, in terms of the EBITDA decline of maybe about a percentage point on a YOY basis, what could be the probably contribution from input prices and what could be the contribution from rising competitive intensity?
No, I think there is no driving competitive intensity which has impacted our margins, because these all are the projects which we say they were all being awarded to us from 2.5 years back. So it's only price hit which has impacted the margin.
Okay. And the newer rate changes that the government has introduced on exports, which is likely to push down the domestic prices in iron ore and steel, what is the kind of benefit that can happen for our projects?
Definitely, the problem which we are it is so severe. We would be getting some relief out of it. It's not that we will be benefited, but the margins impact which has been so significant in quarter 4, which likely to get subsided during, not in quarter 1, but in quarter 2 at least.
Okay. Yeah, thanks, sir.
Thank you. The next question is from the line of Amruta Dahirkar from Wealth Managers. Please go ahead.
Thank you for the opportunity and congratulations on the performance. I have just two questions. First one being, you talked about the EPC formula correction for the cost inflation. So is it safe to assume that whenever this new formula is being implemented by NHAI, so we will be getting the impacted part later on?
No. See, this formula would be for new EPC project. It will not be having any impact for the older one.
What would have been the impact on the FY22, the EBITDA? So if you could give us a quantification of roughly how much would have been the impact?
Sir, I have just given the indication. Then Q1 or maximum Q2, the things would be all stable and we will be coming back to the normal of 16 to 16.5% EBITDA.
All right. And my second question is regarding the HAM projects which you've received the provisional completion certificate. So when will be the from when will be the annuity be payable, will be receivable for us? And if you could give us the amount of the annuity that was receivable.
See, the annuity amount is just 2% of the total project cost, and this is every 6 months we would be getting the annuity. We have already applied for the annuity, and which is likely to be, say, in the system, say, within a week. But this annuity payment doesn't matter for APC. So there is only SPV or it's a escrow mechanism where the annuity payment would be received in those.
All right. So on a standalone basis, the annuity payments will have no impact.
Yeah, nothing.
Thank you.
Thank you. The next question is from the line of Vikas from Health Services. Please go ahead.
Yeah, hi. One of the small clarification is required. Is it recently the company is acquired in the 26% in the Safety First Engineering and Safety First partnership. It is around 9 crore investment is there. Any rationale behind for such kind of the small investment?
Yes, very specific commodity which is being used with a significant miscellaneous items. There's a metal beam crash barrier or such kind of crash barriers. We usually are purchasing from out of the market. This is a dedicated where we have invested, and there is a lot of opportunity going ahead. Where I think most of the companies they have done a backward integration and say internally. So this is not being done wholly, but it is a significant portion being taken into as a stake in that company.
We have the substantial cost saving in future?
Yeah, of course. I think that's why the decision has been taken.
Okay. So right now we have hold is 26% in private limited and partnership. Correct, no?
Correct.
Okay. Thank you.
Thank you. The next question is from the line of Alok Diora from Motilal Oswal. Please go ahead.
Yeah, good afternoon, sir. So most of the questions were answered. Just a couple of questions. So you mentioned about the increase in the capex for FY23 as compared to the usual run rate. So is it like for next few years the capex would continue to remain in this elevated range of 100 to 125 crores?
No, it's not like that. We are looking at a significant increase in the order inflow during that particular year. So for that reason we have indicated, and then again as in 2016-17. So this is almost 5 years plus 6+ years of equipment being put to use. So this is the older fleet now being with the latest technology. So that would be added benefit in our operational efficiency. Fuel economy is there. So all technical benefits are available, and then definitely getting the right value of that depreciated product. So this makes sense that up to just 70-75 crore rupees, where it would be in a range of about, say, for this year it is at about 110 to 20, but then again it would be stable to say about 100 odd crore rupees, 90 to 100 crore rupees.
Sure, sir. And also, sir, at the very start of the call, you mentioned about asset monetization by end of the year. So any discussions are on, and just wanted to understand what's the appetite currently in the market, if you could just throw some light on that.
The appetite in the market is all available. It was only a matter of debate on the O&M cost, which we are just looking at it as on a practical basis and what they are assuming on a projection basis. So that is the only gap, I think. And with all, all data being studied now, had it be rate of interest, had it be GST impact on the NVT, now the things are very clear. So there is not a big debate is going to be done. This is only their keenness is there, and we believe that within few months, significant improvement in that basis would be, in that mode would be done. And by this year end, we are looking for the transaction to happen.
So we are not looking at any sort of delays in that, right? I mean, that's the by that time we will be through with some this transaction on the monetization part.
No. We don't believe there is we are expecting much delay in it.
Sure. That's all from my side. Thank you and all the best.
Thank you. The next question is from the line of Deep Sukhwani, an individual investor. Please go ahead.
Hello. Sir, congratulations on the good set of numbers, especially given the rising input cost and the inflationary environment. I had a couple of accounting questions. So first is building on the contract assets and contract liabilities question that was previously asked. So is it fair to expect that eventually these contract assets and contract liabilities, given our work as we deliver, we should expect them to turn into cash for the business? And second, there has been a substantial increase in the non-current financial assets. I was just trying to understand what exactly goes into these. And similarly, there has been increase in the finance cost that we have paid, although as you mentioned that the payment terms for NCDs are yet to start. So again, what exactly went into this increased finance cost? These are the only questions. Thank you.
So as you have, I think this first question is about the contract liabilities and contract asset. The contract liabilities are again the mobilization advance which we usually receive in all the projects, had it be from the HAM projects into through SPV or these other projects from EPC or any private client. So this is during course of execution, this mobilization advance would be recovered. So, but then again, they are all almost interest bearing. It's not that they are free of interest. Number two, so the contract assets are those assets which is a part of unbilled revenue. So if we are doing those on EPC mode. So there are few of the milestones or stage payment which usually could not be converted. And mostly we experience those things to happen in the project where a significant execution post 75% plus execution or that execution has been done. So there again, those unbilled portions remain as the contract liabilities, contract assets, which part of it. COS is there, where certain variation, certain modification is there into the contract, certain milestones are there, so all in settled in the final bill. So there we have seen that there every month or say every quarter there is a significant portion being received and significant portion being added into it.
Okay. Got it. And the second question was around the increase in non-current financial assets and the finance cost.
Can you give the number of this non-current financial asset? Say it can be GST receivable from government authorities.
Okay. Yes. I was just having a look at the consolidated cash flow statement. The overall increase in the non-current financial assets that we see is around 4,000 something, 474 crores approximately, and the finance cost has gone up by 23%, around 118 crores.
In consolidated, you might have seen there is an annuity, I think. That is annuity.
Oh, okay. All right. And on the finance cost side?
No, the finance cost just doesn't have impact in the parent company. It is all SPV where the entire financial model is being taken into consideration.
Got it, sir. Good. Yeah. Thank you so much.
Thank you. The next question is from the line of Faisal Hawa from HG Hawa and Company. Please go ahead.
So, going forward, the competition is continuously rising in the tendering, and most people are quoting even below the bid price. Or so this will lead to real destroying of many companies. So how are we really preventing from that happening? And with large players like Adani also coming in, how will we really protect ourselves from really bidding too low and going wrong?
See, we are maintaining our own standards and discipline for the bidding, at least maintaining and keeping a balance. So that is only what we can say. that we are keeping quite a good control on what should be the margin, wherever we are moving as far as geographical areas, and where we can, it is the right move for the company. Had it be a balance order of our EHAM and then EPC and then private EPC even. So that is how I think we are keeping control on those things. And I cannot say much about most of the companies doing wrong and just losing because of that reason. So that is all evident, I think.
Because we have seen a new player like Adani, coming in and, winning so many contracts all through the country. And, this means that there's hardly any entry barrier into the road construction vertical.
They have opened the competition for the players, for at least as a developer. It's not only for EPC. For a developer, they have opened it for all the core sector experienced players. It can be a port, it can be any building, or it can be any real estate. They can just bid for those HAM or EPC project. BOT project. So they are now going, as a developer, they are doing those things. But for EPC, they are getting it done through the players like us only.
So would it make sense now to go into more BOT projects, because there the competition is much lesser and very few players, and the government has made the laws and the rules quite easy and favorable to the developer?
The things where the traffic origination and destination traffic studies are there, they are all kind of projections. You cannot assume a right estimate. You can just take on the right estimate what exactly would be the traffic going into your project which you have developed. So ultimately the things are, most of the things are not, dynamics are changing. So year on year you are seeing that lot of NH and national highway expressways and these are corridors being developed. So this estimation at this point of stage is, I think, not appropriate.
And do you feel that, irrespective of whether NHI get these cess funds or or even if the minister is changed or whatever, the kind of momentum that NHI has now gained will really continue over the next 4 to 5 or 6 years?
Yeah, probably they have already indicated, and the government has, it's not that work. There is not ministry which is indicated. The government has indicated that there is a Bharatmala 1 to be awarded in the next 2 years, with Bharatmala 2 to be approved from this parliament. So there, I think they are keen on developing the core network for national highways and expressways. And had it be labor cess or whatever, it's a Gati Shakti which they have rolled out. So this means that infrastructure development in all sectors to be taken, as a control in an umbrella. That is, this sees the significant sincerity of the government, for those infrastructure development projects.
So on a very ballpark figure, in the next 2 to 3 years, how much would be the total ordering that would come through, or what is the total addressable market that we have for the next 3 years?
For us?
Yeah. No, for overall the industry.
So I'm not having a big idea on it, but definitely in most of the sectors, it can be water sector, JGM, or railway, where the high speed density.
Only in roads.
And roads definitely, they are already having that 40,000 kilometers to be developed in Bharatmala 1 and 2. So there's this sense that within the next 5 years, a lot of opportunities are likely to come.
So in amount of crores, what would that mean approximately?
I'm not having a fair idea of it.
Thank you. I would request Ms. Ahwa to rejoin the queue for follow-up questions. The next question is from the line of Shravan Shah from Dolat Capital Markets. Please go ahead.
Yeah, sir. 2 questions. First is, we said that we have bidded for projects of around 14,000 odd crores. Is it right? And if you can break it into the HAM EPC.
I have seen that. I think it is some mistake which I have conveyed. That is 1,400. It's 1,400 crore rupees. Where
okay.
There are only 2 projects which we are yet the bid results are yet committed. Because then not much of activities, bidding has happened in last April and May.
Okay. So these 2 projects are EPC projects.
These are EPC projects, correct.
Okay. And lastly, on the date front, so given everything, strong guidance, so the date likely to be maintained at the current level of 300, 350. That's the level that we will look for at least 2 years.
Correct.
Okay. Thank you, sir, and all the best.
Thank you. from the line of Meet Parekh from Anand Rathi. Please go ahead.
Yeah, thank you for the opportunity, sir. I just had two questions. First question is on the receivables front, how much is the receivable from Adani and IRB? If you can tell it, sir.
Adani receivables are, including retention, it is coming at about 52 crore rupees. And IRB receivables are about, say, including retention, if you take out the retention which is not yet due, you are not due, it's 167 crore rupees.
160. Okay, sir. And on the second question, sir, when you have given the guidance for the EBITDA margin of 15.5 to 16% for FY23, does it include the early completion bonuses from the projects for the HAM projects we are going to get or not?
No, it is not considered.
Oh, okay. Thank you. That was my question.
Thank you. The next question is from the line of Jiten Rushi from Axis Capital. Please go ahead.
Yeah, thank you, and thank you for follow-up question. So my question is on the HAM side. So government has recently proposed for the net worth criteria, changing net worth criteria. So what is the status on that? So last year I was discussing with the government on a regular basis. So when is this expected to get implemented? Because that is very important, because most of the smaller players' net worth and the negative trajectory, and still they are able to win projects. So how do we see this to get normalized, or do we not get the proposal will not get passed? Is your opinion on this?
So there are a few modifications already been given. So that's why the bidding activity is now almost at a standstill. So they are going to do this modification very soon.
What kind of modification are these? Can you throw some light?
One is the net worth criteria. One already is the O&M criteria, which they have now standardized as a percentage basis of the BPC or the TPC.
The BPC. And sir, on the Rajasthan North and Maharashtra North projects, so these projects are in a standstill, or we can see some execution from these projects?
No, we have already executed some 60 odd crore during the year in Rajasthan project. So it would be all at a snail's pace. It is not like that there's a big chunk of revenue is expected in 23 even. So in Maharashtra even it's bits and pieces, things are being moved. We are doing some execution, but not more. 22 crore of execution being done last year.
Sir, on the exit of the senior management of Mr. Vinod Kumar Agarwal, so any replacement are we looking out for, or we are going to continue the same team?
Sorry?
Sir, on the Vinod Kumar Agarwal sir exit, so are we looking for any replacement in the senior?
No, he was looking into an indirect taxation, and we have already engaged one more senior position for that.
Okay. So last question is the foreign mines. Are we looking for any mines in the Telangana and AP region? Because now we have a significant order backlog from this region, and we are expecting some faster execution. So sourcing of aggregates from outside third party would make sense, or we are looking for leasing any of the mines from there?
I think all the projects do have a unique areas where they are being there. So the mines in nearby, say if you are talking of even Bangalore, Tumkur project, or if you are Khammam Devarapalle or Orissa, all these three corridors, the Raipur-Visakhapatnam corridor project. So where we have established most of the crushers, or they are being given to the crushers which being established in our mines which we have allocated to us for that specific project. So it's only
allocated by NHAI.
The project in North usually it doesn't make sense to establish, because there are a lot of areas, a lot of mines already established, and where we are getting supplies intermittently. There's no hurdle into it. They're getting the good rates even.
Okay, sir. That's from my side, and all the very best for the new financial year. Thank you.
Thank you. The next question is from the line of Harshad Gadekar from GEPL Capital. Please go ahead. Harshad, your line has been unmuted. Please go ahead with your question. So I would request you to unmute yourself from your handset and proceed with your question. Due to no response, we'll move to the next question, which is from the line of Dhruv Bhimrajka from Monarch AIF. Please go ahead.
Yes. Sir, in the latest NHI circular, they have extended this relief measures for contractors and developers till 31st October 22. So how do you see this continuation benefiting you and the industry as well?
For sure, I think it is the entire industry being benefited because of that relaxation being given, and they've also deferred or extended this timeline for submission of the performance guarantee. It is now would be 3% only till March 23. It's not going to increase. So with that, I think everybody is benefited.
Right. Okay, sir. Thank you so much.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Harendra Singh for closing comments.
So thank you everyone for your participation in our Q4 FY22 earnings call. In case of further queries, you may get in touch with Pareto Capital or feel free to get in touch with us. We look forward to interacting with you in next quarter. Thank you.
Thank you. On behalf of HG Infra Engineering Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.